I've missed you all. FOMC is upon us, along with Amazon, Microsoft, Meta, Apple, and many others. Visa and also people's favorite SoFi has reported. We've got some more earnings finishing up also at the end of a extremely bullish summer. Welcome everybody to the channel. Hopefully you're doing absolutely amazing. It's so good to be back to present to you a middle of the week video. I have, I've just been slacking on the middle of the week videos. I'm not gonna lie, I was pumping them out and then I was doing my Sunday stock and market analysis, and yeah, I just want to make sure I update you guys. So if you're new here, right, we're going to get right down to business. I know I've watched videos before and it kind of, this intro gets a little bit extended. So we're getting right down to business. I have the charts up ready to go. I'm going to give you some ideas of what to do for the end of July going into August and preparation for September and potentially October as well, where we might have some profit taking coming in. Now, I know you might be thinking, Brian, I don't know who you are, or if you know me, you know, I don't see any profit taking. I don't see any slowing down this bullish nature. Something drastic is going to have to come into play. And that's a lot of times what happens in the stock market is we have these drastic kind of black swan events, or a news article that comes out, or earnings that kind of shock somebody that says, wait. Meta beat earnings and it dropped, or Microsoft beat earnings and it dropped, or Apple beat earnings and it dropped, or whatever it is, right? I want to make sure you're prepared for that, which are traps when these markets are overextended and they're, kind of in this extreme greed. Everyone's feeling good. Their portfolios are up, so on and so forth. All right. So if you're here, hit that like button. Would love to have you inside of our Discord. That is Leverage University. Also, there's some links down below to get some free stocks with Webull and also Robinhood. If you don't have those, I think Webull's a pretty good deal right now. If you don't have that, that is primarily what you see me using, which is Webull. And also, hey, let's just go ahead and jump into it and look at it. Webull shares are also on discount as well, anywhere between $10 to $12 as a buy zone for Webull, with a target of 18 to 20 in the short term. All right. So with that being said, without further ado, let's jump into the SPY and QQQ, IWM, our main indices. And then I'll cover some of the futures markets as well. I do trade futures, but I use my options knowledge and the ETFs of the markets to also generalize what may happen in ES, NQ, and RTY. All right. So those are the futures of these respective ETFs that we have here. All right. We good? Get your charts up, ready to go. All right. So let's jump on the weekly time frame of SPY here. And for the first time in a while, since the middle of June, towards the end of June, we have a little bit of a red week kind of forming, right? And all that I would consider is that we have some profit taking. And the reason I consider this candle more profit taking than some type of drastic pullback crash, well, all the stuff that you may hear in the markets, is simply because we're still forming higher lows, higher lows, higher lows, higher lows, and we have higher highs. Now, one thing that I did notice here is that we have dropped back below the previous week high. Okay. So that is one piece that we need to consider, is that this 637 close of last week's candle has failed back below and failed to hold that to continue higher into 640 plus. Okay. Now, the thing that is going to shoot us back above that 637 is probably going to be a positive FOMC meeting and interest rates, or we're going to have some earnings that is going to give us that shot upwards. Okay. And that is very much possible, especially since we have some of the companies that have been extremely strong for the past year or so, especially from the dip of April, which is Meta, Microsoft, and Amazon. Google reported well, and Google has been sitting, just shy of 200 for the last couple of days since its earnings last week. All right. So that's what you want to go ahead and mark off, is on this weekly time frame, 637. Do we reclaim that last week's candle close high? And if we can do that, then 640s plus is in play. All right. Now, if we remain below that 637, our last week's high, we can see here I marked it right there with that red line. If we remain below this, I'm going to look at it here, right? And we continue lower, we do have 630 and 631 that will be that next psychological level, which is this green line right here. Okay, so that will be the next support. Now, if you notice, for those who sticked on to my Stock Sermon Sundays, what level hit almost to the T as I was talking about it on Sunday? 635. Okay. So if you know, you know, this is the level that I said we will pull back to most likely before the FOMC meeting. And if we go any lower and we take out a new low, we can reach this 631 and 630 level. Okay. Now, that is going to be very key for the market to hold if we do this and pull back and see if we can continue higher. Okay. But until then, just be careful of those call continuously bullish if you're trading. If you are looking to manage your portfolio for shares, I'm not here to give you financial advice on that. I've already talked about what you should do potentially in your share positions. I personally like to trim a little bit off the top just to lock in. My number is typically 10 to 15%. If I'm over, 80 to 100% up on my positions, I like to trim, about 10 to 15% off the top just to say I took a little bit and then buy the dip back up and continue to hold those long-term positions. Okay. So that is the idea for SPY coming into FOMC and what we should expect. All right. We are bullish. However, profit taking can happen and we need a catalyst to send us one way or the other. Is that going to be FOMC and the rate cuts or the rate pauses or potential rate cuts in the future for the remainder of the year? Or is it going to be one of the earnings that we have coming up that will send us one way or the other? All right, let's go into the daily time frame. And I want you to pay attention to this daily 20. This is one key indicator that I use on daily time frames to understand where we're bullish above it or if we get back below it. And if you can see this light blue line that I have here, that's the daily 20, and it's sitting right at 626.50. Okay, 627. Okay, so that is a deeper pullback level where there was a consolidation and a breakout above there. So stocks in the market like to rotate to those levels and have almost magnets. So if we go up, pull back, go up, pull back, go up. Okay. So that is a deeper level that if you are a bull, if you're a bull in this market, which some people only look at the bull side and you only trade calls or you only buy the dip to go higher, then you would want to look at primarily 630, 627, and then a break of this previous high back above 637. That's where you're going to get that push higher ideally. Okay. Until those levels have reached, I would be very careful about trying to get in right around this 635 unless you get a rotation and break above. Okay. So those are for my bulls. If you can trade the downside very well, which I do in my community, if you know, you know, my Leverage University members, comment down below, let us know that you're present. But if you trade puts or shorting the market, okay, my signals for shorting the market are typically an RSI on a daily or weekly time frame that is approaching that 70 plus level. Okay, above that 70 level on a daily, or even if I see it on a 4 hour, okay, the higher the time frame, the more confident I am in shorting the market. Okay. Now, does this mean I'm holding puts or does this mean I'm, looking for a crash? No, it just means I'm trading risk to reward. Okay. The best reward to risk ratio right now, in my opinion, is to the downside. Okay. So if you can trade puts and you do trade SPY, right? Or if you trade ES futures, you'd be looking for some type of maybe kind of a head and shoulders here. It's not very pretty, but again, that 637 reject and see if we can get that kind of right shoulder to come down. Or if we break below those previous low candles, if you see that, I'll mark it in a yellow line right below that 635. If we break a new low, there's not much here as far as the next level right there. Okay. So if I move this candle over, we might see a straight down move back to that 630, 631. All right. So there is your analysis for SPY. And I really like the daily time frame look because it gives me that daily 20 attraction level that it might want to come back to like that. All right. We good on SPY. All right. Let's go to QQQ. QQQ, as you can see, a little bit more of aggressive candle here. And in this channel, like I was saying, a beautiful trade to take is when you get this kind of grind channel like that, right? You trade with the trend, but once that trend kind of breaks, that's when you get the volume and pickup. Okay. So look where this daily 20 is all the way back to this 560 level. Okay. So that is the first kind of attraction kind of magnet that we may see QQQ if it breaks new lows or somehow gets rejected again in this channel, which is possible to go higher and then get a bigger rejection trap and come back to that 560. Okay. We're only $6 to $7 away from 560, which is very easy for QQQ to do, especially if one of these earnings come in a little bit mixed, right? And we'll get to some of those tech earnings and my predictions on those coming shortly here as we move along. All right. So that's where I like the bulls to step back in, is more so to that daily 20 or trying to hold up this 5, 6, 7 level. All right. Which is doing right now, right on that trend line, previous highs, stepped in right there. And you can kind of see this 30-minute hammer candle where bulls step back in. Okay. If you're not too familiar with these structures, I'll take a pause. If you want to go check out the video on my channel, right, just type in how to read a stock chart and it should pull up. I think it was about a couple of months ago I recorded that, doing very well on that video. So if you still don't know how to read the stock charts, take a break after this recording and go take a look at that video so you understand what I'm talking about. Okay. So the candles are essentially just showing where the buyers and sellers are. So you see this top wick here, sellers step back in or profit taking came in. Buyers, as you can see right here, it pulled back, bounced and went up. So buyers are present right at that 560 level. Okay. Previous resistance becomes support. Okay. So it's like building a house, as I've said before, that previous resistance couldn't get above that 5, 6, 7, pulls back and becomes a support level like that. Okay. So, if you know how to read the charts, or you're just, stepping into this game and skill set, that is a simple way to know where the buyers are. So if you're looking for it to go up, where do I buy? Where do I place calls? Remember, call option means go up. Put down the phone means we can make money going down. Okay. So if I see sellers, I'm looking at trading puts. If I see buyers or it's in a buy area, I may consider calls. All right. So there's your identification on QQQ. Keep it on a daily time frame, 560. If that trend breaks below that 566, 565, if that breaks, you'll see a candle that looks more like this. Okay. So we probably need a catalyst, but until then, if this holds up, we can see that trajectory go higher, still in that channel. Okay. All right. So all I'm watching is price action. What does it do at these levels? If I see more solid candles kind of coming out of there, I may want to trade the downsides. If I see buyers step back in with bottom wicks like this, then I know they're stepping in and hey, we can go higher. All right. IWM, beautiful trade from our community. And this is a perfect example of what QQQ and SPY may look like. Do you see how IWM is in this channel as well? Now, it hasn't officially broken out of it, but it's getting, a little bit dicey, right? A little bit dicey. Look left and you can see exactly what happened last time IWM got to this level. Now I draw these zones that's not already there, right? So it's usually, looking like this on my charts. Okay. Just plain. I can even turn off the moving averages and just keep it really plain. And all I do is look left, look at the bottom of my screen. Do you see the scroll? That's the date, right? So 2021 levels, right? Last time SPY every time IWM gets to 226, 227, there's sellers or profit taking. So I mark this level as a resistance. Okay. I do not want to trade calls or look for more upside until it breaks. It does not mean it can't break and go above. It just means I need confirmation for it to do so. I can't just assume, oh man, we're bullish, just trade calls. It's going up. It's going up. That's where you get trapped because there's sellers stacked up here. Right. So let me go down to the weekly time frame. You can see exactly what's happening. As I drew that on the monthly, I go down to the weekly. It stays there. I get a little bit more information. If I go down to the daily, I can get more information, right? So if I draw this like this, if I see it breaking out more, I mean, there's potentially more downside and look left, where did buyers step back in last time? Right around this 217, 218 level. But how you know that? Because when we were falling, what stepped in? Bounce right there. That candle right there. So anywhere in this kind of zone, right around 218, 220, I want to be careful going into that. So I've got room to trade it down if it wants to pull back into that. But once it gets down there, it could hold up and go higher. All right. So that is how we trade more specifically. Now, trading, again, as I always mentioned, versus long-term investing, you can use the charts the same way. So a long-term investor is not looking at these short-term moves potentially. They're looking at a weekly or a monthly time frame, right? So a long-term investor bought the dip down here on IWM at 171 to 175 and rode it up to 226. Now the long-term investor is maybe trimming some profits because they see it's in resistance. Doesn't mean they're selling their whole portfolio. It just means, hey, I may want to be careful up here because it's rinse and repeat. Then it falls back down lower. Okay. Pick it up again. Okay. Stock market does not go straight up in a straight line. Do not chase, right? Wait for it to come to you. Buy on a discount, just like you do in anything else. You wait for Black Friday, right? You wait for Prime Day for some of you. Buy it on discount. Okay. All right, let's jump into Google. Okay. Jump into Google because Google already reported earnings and buyers stepped in right here, as you can see, on a weekly time frame, that 190 level. Okay. That is a big weekly time frame level because that was a former resistance back in 2024, held up as support. You see buyers couldn't go lower than that 190 and went higher. Now look what it's doing again. Pull back, buyer stepped in, going higher. So I want to mark this previous week high as a key indicator that if Google breaks above 198, it's going to start squeezing 200 and then potentially trying to break into new highs. Okay. But it's got to clear that yellow dotted line because that's the previous week's candle, right? It's already above the previous week candle close, right? The candle close is that body of the candle right here. Okay. So it's already above the close of last week, but we still got to clear the high of last week, which is right at 198. Okay. So it's in this weird kind of zone here. Clears, we're going higher and squeezing. If it rejects right there, then we can come back down like that. Okay. All right. So Google top watch because they're already reported since last week. So Google contracts are back where they're supposed to be, which are fairly inexpensive. Okay. So IV shows us the price, right? Implied volatility shows us the price, like if it's on discount or not. You want an IV of typically 20 to 30%, 40% is also good. Anywhere I would say, 20 to 40%, it means the contracts are at a good price. Look at Amazon. As it approaches earnings, since Amazon has earnings, right, this week, those contracts start to get a little bit pricier, right? So this is not the normal price point of Amazon contracts, $450, $565. That's not normal. That is why, if you haven't watched my earnings trading video, like go type in earnings on my channel, you can see how to trade earnings and whatnot. All right. Again, all this information I teach inside of Leverage University. I do trade live, but I am primarily a coach, consultant in life and business, all those good things. But in trading, I have the same concepts. I want people to learn why and how, not just taking a signal, not just, hey, jump in calls, jump in puts. You're going to learn why we do this. Okay. So Google, there you go. There's your indications right there. So Google, you can see this break and hold of this downtrend that it was in, pull back, hold that 190 going higher, trying to take out that 198, right? But there was a lot of selling kind of coming in right there as you see that big candle. So we want to be careful up into that 197, 198 level if it clears. Okay. All these have earnings, Amazon, Apple, Amazon kind of cooling off a little bit. So Here's my summary, as many of you are looking forward to, which is what's going to happen with Amazon, what's going to happen with Meta, what's going to happen with Microsoft, what's going to happen with Apple, right? If I move all these up next to each other, Amazon, Apple, and where's Microsoft? Right next to it. Apple, Amazon, Microsoft, and then Meta. Whoops. Meta, pull it right underneath there. Okay, and I'll move Google down. So these four have earnings this week. Okay. All of them are very strong coming into their earnings. Okay. Amazon pushing up into their earnings. And the key is, can they really perform? Which we know Amazon not going anywhere, but is the key thing, can they perform to go higher into this 240, 250 and take it out, right, into new highs? And it would look something like this on their earnings. Can they do that? Awesome. They very much have the possibility of doing that. But what I'm saying, sometimes when they're pushing up into earnings and you're already, at highs, what happens a lot of times, and I touched on this on Sunday, is that it'll pop sometimes and then profit taking immediately, and we'll start kind of cooling off a little bit more drastically like that. And everyone's like, what in the hell happened to Amazon? Why is it pulling back? It's because it might have already been priced into the earnings. Like everyone, kind of like insider information. It may have already been priced in, and everyone already knew, oh, Amazon's going to beat earnings, blah, blah, blah. Right. And then it fades. Okay. But I don't expect these top companies to really like miss earnings. It's more so going to be on their guidance. That's the biggest key, is can they keep up with what's coming next? Right. Microsoft, look at this earnings from last earnings. Right. This is one I'm really paying attention to, because I think Microsoft, it doesn't have to, but I think it needs to cool off a little bit. You see this RSI super overextended on a daily, overextended on a weekly, right? So I think Microsoft might surprise folks and may pull back on their earnings, a little bit after they've reported, right? Let the earnings report, great, cool, profit taking, and then we pull back. That's just my gauge on Microsoft. But we need to watch that 500 level on Microsoft. It's going to be very key for it to hold, right? This is kind of an ugly trend to trade. Long-term shares, great, right? If you bought the dip on Microsoft back in April, I mean, good gosh, $350 to $500, like, even if you did an option leap, right? You've been winning for the past 2-3 months, right, on Microsoft. So it might be that time, if you have Microsoft shares. This is what I'm talking about maybe trimming some off the top, right? Or just holding long-term and saying, hey, I'll let it drop and buy the dip again. Okay. Apple's kind of a wild card, because Apple broke out of this consolidation right here. And we were getting really excited for Apple to kind of take off, right, into that 225, 230 level. I really believe Apple is a steal personally, right around $200. So 200 to 210, that $10 range in here, I think it's still a steal, right? As long as Apple's above $200, really 206, we're technically still good, right? So Apple's kind of a wild card as to what it wants to do, because you can see, it's just still struggling into earnings, trying to get above that 215 level. So does Apple break up, or does Apple cool off back down again? All right, we don't know. And that's going to be, Apple typically comes out with new products. And as we know, Apple's been a lagger of a lot of the tech, because it's just not innovating, right? Another new iPhone. Okay, great. We already know what's coming. Oh, you're not giving us any accessories, blah, 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 right? So Apple's really got to step it up on their earnings call and see what happens. But I do believe Apple's a steal. And I was looking at, option contracts in the short term, August 15th, if Apple does, want to beat, right? We're looking at that 225 or 220 calls into August 15th, right? So I would love for it to fall lower personally, fall lower. So it's just an easier dip buy pickup. All right. If it pops, it's like, okay, hopefully got some shares. We'll wait for the pullback, whatever. Okay. So Apple wild card. Meta, very interesting here. Is this a double top? Like, is Meta a steal at $700, or do we have like one of those scenarios like we did last time? Look left on Meta. Last time it had earnings up into here. 736, pulled all the way back to $500, right? And we're starting to see some selling kind of coming in right around that 730 level again, right? So Meta, very interesting. So what I like to do on here is I like to draw where the buyers are, because obviously it's already kind of selling. So there's a previous resistance right there at 662 to 665. Then also there are some buyers sitting right here, right around 680. So these are levels that Meta wants to maybe attract to. And let's see where that daily 20 is. It's below the daily 20. All right. So now you're seeing a different view here. What happens around this daily 20 when we get below it? Do you see how drastic that selling comes in? And the daily 200 is also a gravitational pull, right? So that could happen. Very similar to what happened last time. This is very much possible on Meta, right? And I'm just going to draw it in existence just to see, right? So that's kind of what my quote unquote prediction is on Meta. I think they're going to beat, personally. Zuckerberg's doing absolutely amazing. I think there may be a little bit of iffiness on guidance, and they may want to trap to pull it back to pick it up lower, right? If you were a big $1 billion hedge fund, do you want to buy Meta at 730 or do you want to buy Meta at 630? Right? So this is a high watch here on Meta that it may be a wild card as well and kind of shock some folks. So keep that on watch. These are all the four that are reporting this week along with FOMC and an end of a month. Wild thing going on. All right, let's jump into semiconductors and some of the, stocks that also we got Hood. We need to pay attention to that. That could be an awesome wild card that could cool off. We got HIMS that's filled the gap, and we got healthcare. Okay, so I'm gonna wrap up here and speed this along. Since I haven't talked to y'all in a minute on the actual midweek video, I want to make sure I give you all the game as possible because the markets are moving during the middle of the week instead of a Sunday market analysis. All right, let's jump into semiconductors. Let's jump into SMH. Okay, let me go into core list and go into SMH. SMH is the ETF of the semiconductor sector. It's what we kind of use as a gauge to see, what the semiconductor sector is doing. So AMD, SMCI, NVIDIA, AVGO, MU, ARM, so on and so forth. Okay. And we can see that it is on the overextended side just slightly here, where it's continuously grinding up higher. Okay. And this is the RSI. Okay. This is the relative strength index. It tells us if it's overbought, so a little bit overpriced, or if it's oversold and we need to pick up a dip. And right now it's slightly a little bit overbought, and you can see some selling kind of coming in a little bit. Pay attention to that daily 20, like I said, right there at that 286 level. That is a gravitational pull. So it's at 293. We could get a pullback to that 286 right there. Now, remember what I just showed you on Meta. If that breaks, that's where that drastic pullback is going to start happening. If it gets below that 285 level. Okay. But that is a support holding up for now on a market, right? That is a gravitational pull that we could pull back to, hold, and bounce and go higher. Okay. So if you've got enough room, that's about it's a pretty good move right there, as you can see. So I'm expecting the semiconductors to cool off a little bit heading into FOMC, heading into the end of the month and going into the month of August, especially since we have those tariffs kind of coming back into play. So if we look at the SMH, now we go into what's happening with NVIDIA. Look exactly what NVIDIA did at 179 into that 180 level, right? Pulled back, right? To where? Not all the way to the daily 20, which is sitting at 167, but it's starting to pull back to those previous support levels. So if I mark this right here, 174, previous resistance, turn support. I want to also mark the daily 20, which is one at 167. And these are levels of support that I'll be watching for NVIDIA to go down to. If it holds, we can go higher. If it breaks below, we can go lower. Okay. If it breaks below that daily 20, we got, pretty much no room down below until probably 150, 155. Okay. So want to pay attention to what NVIDIA does, especially the semiconductor sector. I think the risk to reward, I know a lot of you just don't know how to trade the downside. I'm not assuming or projecting. I'm just, most people only consider the market to go up. So when we talk about trading, they're like, what do you mean I can make money going down? Yes, you can. Okay. So if you know how to, I would look at the semiconductor sector as a really good risk to reward to the downside, as they've been, going crazy from this dip. I mean, look at AMD from $82 all the way up to 185. Like, there you go. There's your double up on your shares, right? So if I go to the daily 20 on AMD, that's all the way back to 153. Okay. 153. And if you can see here, that top wick is starting to come in on AMD right at that 185. So if we break below, we can start coming back down a little bit lower. All right. So that's my mindset of what I'm thinking is, okay, these are good risk to reward setups if I can find an entry on them, if we get the right setup post FOMC and post some of these earnings. Don't want to assume, don't want to guess, don't want to gamble, but it is the idea that we're considering. All right. So there's NVIDIA, AMD, your main ones. AVGO, obviously in the mix. So AVGO hit 300. It fell back below 300, but it is one of the strongest, if not the strongest, semiconductor. And their daily 20s at 280. Okay. And look at that, just extremely bullish on a monthly time frame. And they need to cool off. They don't have to, but yeah, when it does, it's going to cool off pretty drastically, in my opinion. Okay. So AVGO, we don't watch the same thing on the semiconductors. Palantir. Okay. Colin, if you're watching this video, shout out to Colin. He was on our Sunday stock market analysis, stock sermon Sundays. And I mentioned Palantir as a cool off 160 and pulling back to exactly where. That's why the charts are so beautiful. Previous highs right there at 155. And guess where it pulled back to, sitting right at 155. So Palantir, as long as it holds this is going to be a bull flag to try to retest that 160 right out of there. Okay. If we break below that 155, I don't really see it right now just because there were so many buyers that stepped up right here on that little flash crash that we got right down into 153. Got bought back up, went back up to roughly 160 from 153. So buyers are definitely present on Palantir. If I go to my daily, where's the daily 20? 147. So use that as your marker if we do get some more selling coming in. May want to track back to that. Okay. Prime example to continuously kind of the education piece. Look left right here on Palantir where that was a previous resistance at 147, 150 and got up above that daily 20. Where did it pull right back to? That daily 20 right there. So it went from 147 all the way back down to 130, right? And that daily 20 was that kind of marker, kind of like riding like a wave. Okay. So use that as a potential indicator that gives you like an idea of, is it a little bit overdone, a little bit overcooked? Could it pull back to there? If it's anywhere near the daily 20, that's where I really love to trade a lot of times. So Meta was a perfect example, sitting right on it and rejected it. Where's Meta? I know I just had it. Where the heck? Right there. Okay. So look at what Meta did right at 714 right there. Couldn't hold it, got below it, drastic push. Okay. Let's see if there's any more. So that's what I do a lot of times, finding my trades that I scan around and see if any of them are sitting near the daily 20. Oracle, a little bit above. Okay, cool. Palantir, a little bit above. Okay, cool. All those. Microsoft 505. ARM, MU below it. All right, a little bit weak there. Meta, we just talked about. CrowdStrike below it. Now let's talk about this one. All right. What a beautiful trade. And we're wrapping up here. I am down to the bottom of my list. And these are the small. So shout out to the community. I called this one out for a day trade inside of our community here, where I gave the exact entry on SoFi. You can see from the chart, no fluke, right? There's $25. There's the trade idea. If you know, you know. Okay. In SoFi, 24.5 puts for next week. Average cost $90. I was just updating, looking great. Just needs to break that trend. Looking great, right? breaking trend down to 23, looking great, breaking even more, getting more drastic, 100% trade on SoFi. So that means if you entered exactly what we were talking about there, we gave the idea, I did it on live. If you entered exactly, right, for 90 bucks for one contract, you make $250 to $300 in 5 or 6 hours. Okay, that's just one contract. So if you have just say 10 contracts and you spent 900 bucks, right, you make damn near $1,000. Okay, that's the power of trading, of understanding the charts and understanding, what's actually happening. So shout out to the community. Right, there's David. Right, he entered one contract, made 100 bucks, 124%. Beautiful. Shout out to Min. He just joined, fellow pharmacist of mine. There's 210 bucks. He entered 10 contracts, 24.5, average cost 92, entered right when I entered, right? There we go. So beautiful, absolutely beautiful. Okay. So just shouting out the community. This is not gambling. This is not guessing. We have risk management. We're trading the charts, and after hours, we have more selling. And you can see right where we entered the trade, almost to perfection, right at the top, as we call it in trading, top ticking, right? Entering some starter positions, getting in, and it is all the way down here now, after hours. So this you can look at it right here, the contracts that I entered, 24.5, those were 90 bucks. You see they're now 234. In the morning when you wake up, okay, if I had some of my community members enter it, okay, that contract is going to be, probably almost $400. Okay, so 90 bucks to 400 bucks. There you go. All right. So I apologize for the camera. It looks like it went out on me for some reason. So I apologize for that. And that goes to show that it is about that time. It is about that time. So peace, love, and blessings to you. There's my black screen, black face. Okay. So black screen. And I will talk to y'all later in the next video. Peace, love, and blessings. Make sure you comment, like, subscribe. I'd love to see you guys in the community coming shortly. Make sure you check out healthcare. Okay. It is on discount. CNC, Centene, still a great price point to get in. And we will talk to y'all soon. Until next time, peace, love, and blessings. And I will talk to y'all later. Bye-bye.